Sahura will be with you with the global economic outlook in the week ahead, which is going to be the week 48 in 2025. As you can see here, let's start with the previous week, what we had previous week, and then we can go forward and check the week ahead. As you can see here, this is a FedWatch Tools of CME Group chart, which shows that now currently we have more than 70% chance for 25 basis point rate cut in December meeting of Federal Reserve. The chart, which changed too much before Friday changes until Friday speeches that we had from Federal Reserve, New York Federal Reserve, New York Federal Bank, or Federal Reserve members in New York. Before that speeches, we had less than 40% chance for the rate cut, which changed to more than 70% after this very, very dovish speeches, which was about supporting the economy. Anyhow, in the week ahead, we have to wait and see the economic data, and with that economic data, we can understand what can be the best choice for Federal Reserve in the week ahead. Last week, it was the first full week which we had U.S. economic data fully, because week before that, just on Thursday, after 43 days, government shut down. Finally, the markets, all U.S. government opened. We had some economic data, but this week, which we passed just right now, just week 47, it was the first fully week that we had finally the economic data from the United States as well, and also we had some economic data published by delay. Monday started with the GDP numbers from Japan, which showed that the third quarter Japanese economy contracted by more than 1.8% annually. That pushed more pressure on the Japanese economy and support the idea of more economic support from new Prime Minister Mr. Keiichi. In Canada, we had inflation numbers, and we saw that inflation increased slightly to 2.9% for the core measure, and headline inflation also increased by 0.2% on the monthly basis. That can increase the chance of holding the current rate in the last two meetings. Bank of Canada cut the rates already by 75 basis points. So there is no reason for now to continue the rate cut, and we want to see that, okay, the Bank of Canada want to cut the interest rates anymore. U.S. construction spending increased by 0.2%. On Tuesday, we had ADP employment change, which fell sharply to by 2,050 jobs, actually, 2.5K. And factory orders, which increased by 1.4%. The factory orders in line with other economic data from United States, showing that the U.S. economy is fine, as we could see in later published data as well. On Wednesday, we had an API report, weekly report, which showed that the U.S. inventories, oil inventories, increased by more than 4 million barrels, which in the next days, in the official reports, we saw that the inventories fell sharply. And this mixed data somehow confused the market participant as well. Anyway, we had inflation numbers from United Kingdom as well, which we saw that the inflation in line with the central bank expectations continues to slow down, even though it was not that as fast as the market expecting, but still the inflation is falling to 3.6%. That's the good sign that central bank in United Kingdom can continue funnel its rate cut path. Inflation in Eurozone, on the other hand, which for the core measure was steady at 2.4%. Headline inflation slightly eased to 2.1%. But the surprise was on the monthly numbers. Well, the monthly inflation increased by 0.2% for headline and 0.6% for the core inflation, which showed that the central bank should be a little bit more cautious about the continuing the rate cut or not. And most probably, we're not going to have any rates cut in the Eurozone, as the inflation is showing showing more risky signs. In United States, as mentioned, crude oil inventories fell by more than 3,400,000 barrels, according to the EIA reports. Federal Reserve meeting minutes of its October meeting also published, and we saw that the most Fed members, they are supporting the a little bit more hawkish policies. On Thursday, central bank in China held the interest rate at 3.1 and 3% and 3.5% for 1 and 5 years loan prime rates. And finally, the labor market data published for initial jobless claims and continued jobless claims for the last 4 weeks published. But the last week it was 220K for the initial claims for the unemployment rate, unemployment benefits, and showing that the labor market is fine, as we could see in NFP numbers as well. Non-farm payrolls increased by 120,000 paid payrolls, which is fine. I mean, the economy's the labor market is showing a positive signal. Even though unemployment rate increased to 4.4%, but mostly it was because of higher participant rate in the market, which increased to 62.4%. Then continuing other data, existing home sales also increased by 1.2% with more than 4 million unit sales in October. That shows that the US economy generally is fine. On Friday, we had inflation numbers from Japan, which increased to 3% from previous 2.9%, and signaling that showing that the Bank of Japan, even if they are not going to hike the rates in 2025, most probably they will have no other choice to hike the rates in January 2026. Export and trade data also they were fine generally from Japan. On Friday, we had retail sales numbers from United Kingdom, which again increased the chance of another rate cut for Bank of England in its next meeting, as retail sales fell by more than 1% on a monthly basis. PMI numbers in the most developed economies, including the European and American economies, showed that the manufacturing sector is slightly getting more under pressure, while the service sector is supporting the economy. And in other data, we had the retail sales from Canada, which fell by 0.7% monthly basis, and showing that the Canadian economy also need more support. But Bank of Canada already cut the rates, and most probably they're going to continue with the current settings. Michigan 1-year inflation expectation slightly eased to 4.5%, and 5 years inflation expectation fell to 3.4%. And Baker Hughes oil rig count also increased to 419 unit, and the total increased to 554, which signaling of more production for the energy market generally. The data shows that the energy market can get more supply. For the week ahead, market will focus mostly on the US PCE and core PCE numbers. However, we can start with the Monday, which is going to be a very light day. I have to mention that in a week ahead, Monday will be holiday in Japan, and Thursday and Friday will be holiday in United States. Labor Day in Japan will be on Monday, but United States will be a holiday because of Thanksgiving's days. Anyway, that's why it's important, because with the market shut, with the market close, and with the holidays in this economy, we're going to have less liquidity in the market that can increase the market risk, and that can increase the fast changing prices, the chance of the fast changing prices. Monday, we are not going to have very important data. On Tuesday, GDP numbers from Germany can show us flat numbers in the third quarter after slightly easing in the second quarter, while in United States, while we are not going to have the CPI numbers, but the PPI supposed to increase to 2.7% with the 0.3% monthly growth. Core retail sales and retail sales also should show us slightly better economic numbers, better sales, as we can expect that as we can see that the factory orders increase. Well, the factory orders increasing when the PC price index and PC personal spending also increasing. That means that the retail sales also can increase and give them more positive and healthy signal from U.S. economy. On the other hand, CB consumer confidence, which previous month fell from 96 to 94.6, this month expected to continue lowering down to 93.3, but still the consumers are spending money. They feel not so good. Their confidence is slightly is, but in fact, in reality, they are spending more money. On Wednesday, we're going to have the API weekly report as on Wednesday, but the central bank meeting in New Zealand will be in the focus in the first hours as the Reserve Bank of New Zealand is going to cut the rates by 25 basis points. This is expected as inflation is under control and the New Zealand economy needs more support. And most probably we're going to have this in Australia as well in the next weeks. In United States, Wednesday going to be a very important day because of Thursday and Friday holidays. The data all will be published on Wednesday. Initial jobless claims expected to be published at around 225,000. Not big changes, but showing that the U.S. labor market is fine. Core PC price index and PC price index, both of them, they are expected to stay unchanged at 2.6 and 2.7%, if I don't mistake. 2.9, sorry, and 2.9% for the core PC price index, and showing that generally the inflation is still should be concerned in the United States because the inflation, when the US Central Bank or Federal Reserve talking about the inflation in the United States, you're talking about the core PC price index, and this core PC price index is expected to stay at 2.9%. This is what is very important to say, that the inflation expectation is around inflation for the Federal Reserve inflation target is 2%, and when you can see that core PC price index around 2.9%, we can say that inflation should be still a concern. And if we see these numbers as we had it, like for example, we're going to have the new home sales as well and the retail sales as mentioned as well. Generally, we're positive. Generally, the market is positive, but the data, and if we in the line with other positive data, we can see this PC price index and core PC price index around 2.6 and 2.9%. We can say that okay, now is the time to hold the rates, not cutting the rates, because economy is moving fine. GDP third quarter expected to increase by 3.8%, and the fourth quarter the expectations around 4.2%. That says that the inflation should be under focus as the economy is moving fine. Economy with all this data moving 3.8% in each quarter, around 4% for each quarter. That can say that this economy can can handle this higher rates, and higher for longer will be most probably the most the bigger, the higher sound that we can, the higher volume and sound we can see in the market, we can hear in the market. So that's what we are expecting. On Thursday and Friday, we are not going to have very important, so much important data. On Friday, we're going to have industrial production and Tokyo inflation from Japan, 2.6% for industrial production nationally, and Tokyo inflation also supposed to increase to 2.9% from previous 2.8%. Inflation from French and Spain also should be published, and French. The Spanish inflation expected to stay around 3.2 or 3.3%. And Canadian GDP, which is expected by increase by 0.1% in September. For the third quarter, we expect to see around flat or slightly falling, contracting economy or GDP in Canada. Looking at the market reaction to these data, generally, while the market risk is still high with the VIX around 21.40, we can say that the market risk is still high, and with the higher risk in the market, demand for the safe haven can increase, and risky asset can be under pressure. Dollar index, depending on following these data, still moving strongly above 100 mark. For the week ahead, we're gonna expect to have a choppy days, and with the US dollar index around 100 mark, slightly higher or lower, but we can see the number around this. This higher risk in the market can support the gold price as well. As we can see, the gold still moving above $4,000. In the week ahead, generally, we're expecting a positive reaction in the gold market. As if we go towards the dovish policies, weaker US dollar can increase the gold. And if we go towards hawkish policies, and weaker stock market can increase the demand for the gold. In energy market, we can say that on November 13th, we're gonna have the OPEC meeting. But before that, with the ongoing geopolitical tensions, we cannot expect the price to fall sharply. But generally, the economy on the economic side, less demand can put the pressure on the oil price, and around $60, between $55 and $60 is what we're expecting to see the WTI prices for the week ahead. As for the S&P 500, Nasdaq, Dow Jones, and other generally stock markets, we can say the movements with the positive reaction, with the positive expected data, generally we're expecting to see that cannot be in favor of the stock markets. And with this positive expected data, we can say that the U.S. stock market, generally the stock markets will be under pressure. And we're not, I do personally not supporting any positive reaction in the market. Even if we have some correction, that can be only the correction, and overall downtrend still can continue. The same expectations we have for the stock market, for the cryptocurrency market, as there are the high risk in the market, and this higher risk can put the more pressure on the risky assets, including the stock and cryptocurrency market. So we are not a positive. I'm not personally positive about the crypto market still continuing this downtrend. If only can the Bitcoin price can move higher, if only it can recover above 97,000. Otherwise, the downtrend for Nasdaq can continue. 80,000 and 77,000, around the 77,000 can be the next targets for this region. That was what happened previous week and what we're expecting for the week ahead. Hope it was useful for you. Talk to you again. Have a good time. Bye-bye.